This is Nightly Business Report with Sue Herrera and Bill Griffin.
Payday. The pace of hiring picked up in August, and worker paychecks may finally be getting fatter. Closing the gap, she was a trailblazer on the tennis court, and now Billie Jean King is helping change the game for gaming. Reduce, reuse, recycle. The motto that led to a bright idea and a successful metal scrapping business. Those stories and more tonight on Nightly Business Report for Friday, September 7th. Good evening, everyone, and welcome. Bill Griffith is off tonight. It is being called the strongest job market in a generation, and today we got the numbers to prove it. In August, the economy added 201,000 jobs, and the unemployment rate remained near an 18-year low at 3.9%. Some were concerned that the threat of tariffs and counter-tariffs would hold employers back from hiring, but that wasn't the case. And as Elon Mui reports, employees got another bit of positive news.
Another solid month of job growth. The big surprise? A jump in wages. Average hourly earnings rose 10 cents to $27.16. That's a nearly 3% increase from a year ago, a pace that the president touted today while in North Dakota.
And what happened this morning? Did you hear that? 2.9%. It's like the best wage number that we've had in many, many years. And that makes me very happy.
What I think people need to realize is it's not the unemployment rate that brings people back into the labor market, but it's wages. Right. People decide to return into the labor market because they think they have a chance to make money.
And that may be why job growth in August was broad-based. Healthcare added 33,000 jobs. Construction was up 23,000. And transportation was up by 20,000. Still, a few sectors did shed some workers. Manufacturing was down by 3,000 jobs. The auto industry lost nearly 5,000, and retail shrank by almost 6,000 jobs. The Labor Department also lowered its estimate of job growth in June and July by 50,000 workers. But even with those revisions, job gains over the past 3 months have averaged a robust 185,000 jobs a month. And some experts fear the hot job market could force the Federal Reserve to raise interest rates more quickly.
I still think the Fed's going to do 2 more times this year and 2 more times next year. I know there's a lot of question mark about December, but if I'm Jay Powell, so long as that labour market is tightening, so long as we're generating 150 to 200,000 jobs, I think I keep tightening until I get to neutral.
And higher interest rates could end up taking the steam out of the labor market. For Nightly Business Report, I'm Elon Mui in Washington.
So let's turn now to Craig Dismuke for some more analysis on today's jobs report and what it might mean for the Fed. He is the chief economist at Vining Sparks. Good to see you again, Craig. Welcome back.
Hey, good evening, Sue.
So weigh in on this. It was a very strong report, almost all the way across the board. Some are saying it may be too strong. Where do you fit on that?
Well, I would agree. I think it's very strong, obviously. Just to give it some context, for the year so far, we've averaged 207,000 payrolls per month, so very strong for the year. Coming into the year, economists thought we would average around 165,000, so over 40,000 more jobs per month than what economists thought. So it's been very good. I think the question is it sustainable? And I would say that I don't think it is going forward.
So do we revert to the mean and still have job growth, but not growth that's too hot? Where do you think we're going to settle out?
So I think we will slow down. I think one of the challenges, and you can see it in the report this morning, as we've seen growth, job growth above what is sustainable longer term, there's starting to be some wage pressure. We're seeing wages up to 2.9% now. That can start to create some inflationary pressures. As it does that, the Fed could start to become more reactionary. And that's what our concern is that the Fed has to start hiking rates faster than their gradual pace they've been on so far. If they do that, then I think it could certainly slow down economic growth and job growth. We expect to see job growth slow down to around 180,000 for the second half of the year, and then down to 160,000 for 2019.
Where do you fall in terms of the Fed? You mentioned the fact that you think they might be a little bit more reactionary. We heard one of the people featured in Elon's piece saying that basically he thinks 2 this year, 2 next year. Do you think they'll do more than that in terms of hiking rates?
Well, if you see job growth continue above a 200,000 per month pace, then it could force their hand to do so. And I think that's what the risk is. Our base case is that as wage pressure starts to weigh on employers' ability to hire, that you see job growth slow down a little bit, which keeps the inflationary pressure lower. And if that's the case, if that plays out as we expect, then I think you'll see one, maybe two this year. We're starting to believe that you'll see two more this year, and then the potential for one or two next year. I do think that once we get near 3% on the Fed funds rate, the economy is going to have a little bit more difficulty managing that, and we'll see activity start to slow a little bit. So I think the neutral rate's a little bit lower than what the Fed is projecting at this point.
Okay. Craig, thank you so much. Craig Dismuke with Vining Sparks. Well, before the release of the monthly jobs report, the president of the Boston Fed said that the central bank's plan to gradually raise interest rates is the right one.
When we have an economy that's already where we want it to be, there's no reason to be accommodative. And we still have accommodative monetary policy. The only reason we shouldn't move it up more quickly is because we don't have that much inflationary pressure at this point. And partly it's a prevention to make sure that we don't have more serious inflation going forward.
Federal Reserve policymakers are scheduled to meet at the end of the month, and they are widely expected to raise rates a quarter point. On Wall Street, trade concerns pressured stocks as the market closed out a rather volatile week of trading. The Dow Jones Industrial Average fell 79 points to 25,916. The Nasdaq was down 20 and the S&P 500 dropped 6. And for the week, all of the major averages were lower. Bob Pisani takes a look at what investors are focusing their attention on.
Stocks were weaker on the summer Friday as trade tensions mounted once again. The market started the day lower after a strong jobs report showed wage growth rose to its fastest pace in 9 years. Good for consumers, but that sent bond yields up and spooked stocks since a hotter read on inflation could spur the Federal Reserve to raise rates more aggressively than investors thought. Then came President Donald Trump's announcement saying he's ready to slap another $267 billion in tariffs on Chinese goods, which signaled a rapid escalation of the U.S.-China trade wars. Remember, this is in addition to the $200 billion the president had previously announced, which Trump said could come very soon. Stocks immediately turned south on this news, and the Dow suffered its biggest drop in about a month, led lower by major industrials like Boeing, United Technologies, and Caterpillar. Trump also said he is beginning trade talks with Japan, which so far also appear to be off to a difficult start. No surprises that the usual trade-related suspects traded down: metals and mining stocks, oil companies, and large Chinese stocks like Alibaba and Baidu. This all follows an already tough week for tech stocks, which fell almost 3% amid a slump in social media and semiconductor stocks. So for those at home keeping score of what exactly moves the markets, number one, it's trade fears. Number two, it's the Federal Reserve raising rates. And number three, technology leadership faltering. But political turmoil in Washington, not so much a big market mover. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Apple says some of the proposed tariffs would hit some of its products. In a letter to the U.S. Trade Representative, Apple indicated that a proposed 25% tariff on $200 billion worth of Chinese imports would affect a wide variety of its products, including the Apple Watch. Shares fell a fraction in trading today. Well, trade, the economy, and taxes are just some of the issues that will be on the mind of voters when they head to the polls for the midterm elections. And one of the most closely watched contests is in California, where we find John Harwood. He's in Anaheim tonight for us. John, as the jobs report showed today, the economy continues to boom. So what does that mean for Republicans trying to maintain control of Congress?
Well, Sue, not as much as they have hoped it would mean. There are three reasons for that. One is that many average workers have not seen much pickup in their wages, although the jobs report was good on that front today. A second reason is that there are a lot of voters who, even though the economy is doing well, as it is here in Southern California, have concerns about other issues like President Trump's behavior. And then finally, there's a mixed bag here in Southern California to the tax cut that was passed last year. Yes, it cut rates, but it also took away the popular state and local tax deduction. So there are some people here who are going to be paying higher taxes, not lower taxes.
All right, so those are some of the arguments. What other economic arguments are both sides of the spectrum making?
Well, it's so interesting here in California's 45th District in Orange County. You have the Democratic candidate who's a protege of Elizabeth Warren, a law professor, like Warren used to be, who's making the case that the benefits of the economy are not being evenly distributed, and she wants to change that. On the Republican side, you've got a former stockbroker investment executive, and she's making the case that a turn toward Democrats in control of Congress would be a radical economic shift. Take a listen.
I think you're going to see this country move more towards socialism under Nancy Pelosi. You know, Nancy Pelosi does a very good job of representing her people in San Francisco, but they simply are not on the same page as the constituents in my district in the 45th.
I teach business law, and I've seen firsthand that we need to have rules of the road that make capitalism functional, that make it work. And so this is about making sure that we're creating opportunity for families, that we're balancing what businesses want to do for a profit motive with making sure that we have opportunity.
And of course, Donald Trump is a wild card in this race, unpopular in this district. And in the convention center behind me tomorrow, former President Barack Obama, who's very popular, is going to be here to rally for the Democratic candidate Katie Porter and a half dozen other Democrats running. California is a key state for Democratic hopes to win back control of the Congress, guys.
All right, John Harwood, thank you so much. And it is time to take a look at some of today's upgrades and downgrades. Southwest's rating was upgraded to buy from hold at Argus Research. The analyst cites improving domestic airline fares. The price target is $73. The stock rose more than 1% to $61.90. Wells Fargo's rating was cut to neutral from buy at Macquarie. The analyst says it's a stock valuation call. The price target is $63. The stock fell a fraction to $57.40. Still ahead, it's not easy finding bargains in this market, but our market monitor says he did just that. Verizon's head of media and advertising is reportedly in talks to leave the company. Tim Armstrong came to Verizon in 2015 when it acquired AOL. He helped direct its purchase of Yahoo 2 years later, but struggled to connect the online advertising business with Verizon's wireless customer data. A rough day again for Tesla shares. The company's chief accounting officer resigned after less than a month on the job. And news surfaced that the head of its human resources department is leaving as well. Add to that, this video of the CEO, Elon Musk, apparently smoking marijuana in a live podcast appearance with comedian Joe Rogan. Put it all together and you have the recipe for a down day. The stock closed 6% lower. Tesla shares are down more than 20% since Musk first tweeted about going private, and that was last month. The casino industry, as of late, has been launching a number of initiatives that it hopes will close the gender gap. The latest effort is being made by Caesars Entertainment. The casino has turned to a female tennis legend who has served up gender equality in her own sport to help tackle that problem. Contessa Brewer is at the U.S. Open in New York with the details.
Decades ago, Billie Jean King made a name for herself as a trailblazer, a feminist tennis champion.
We've fought very hard to have equal prize money, and the U.S. Open was the first major in 1973 to have equal prize money for men and for women.
Today, she's taking the lessons the game taught her and applying them to gaming.
I think what they like from us is the inspiration to get people on board, to convince people that this is the right path to take. Men are much better than they used to be. The younger generations are fantastic.
Among the companies King is advising, Caesars Entertainment. It's working to fill 50% of its executive posts with women by 2025. Caesars executive Jan Jones Blackhurst knows about overcoming challenges to gender equality. In the 90s, she became the first woman mayor of Las Vegas.
There's always a little pushback. There's pushback from white men who think their jobs are going to be taken, and quite frankly, They've been taking our jobs for a long time.
Other casino companies are making notable strides as well, in part because it's a highly regulated industry. MGM just opened a new casino in Massachusetts, built by more than 7% women construction workers, double the national average. And it boosted partnerships with women-owned businesses like park cleaners.
MGM was really looking for diversity here to make what they have envisioned work, and that's embracing everyone in the community and treating us as equal.
Wynn Resorts is following the same blueprint for the newly renamed Encore Boston Harbor, but the initiatives have been especially far-reaching, following a Me Too scandal that led to the resignation of its founder, Steve Wynn. In tackling the fallout, the company hired 3 women to sit on its board, created a new department to address fair treatment, and commissioned a pay and promotion study.
I think we'll wind up with a better work environment and a better place for our guests to enjoy, because they'll look around and see that we are really reflective of today's society.
King hopes more CEOs will recognize the value in leveling the playing court.
I want them to ask themselves this question: do I want to be on the right side of history? The right side of history is always caring about each person and fighting for equality for everybody.
From the courts to Las Vegas, it takes more than lady luck to change the game.
Is it hard? Yes. But is it worth it? Absolutely.
At the U.S. Open in New York, Contessa Brewer, Nightly Business Report.
A Barnes & Noble investor pushes for the company to sell itself, and that's where we begin tonight's market focus. Richard Schottenfeld, one of Barnes & Noble's largest shareholders, disclosed that he had raised his stake in the bookstore chain and spoke with the founder about considering a potential sale. Schottenfeld said shares are substantially undervalued and represent an attractive investment opportunity. Barnes & Noble shares popped 16% to $5.30. Mondelez is forecasting smaller than expected earnings growth for next year. Today, the CEO unveiled a plan that he hopes will help drive growth, and he plans on using his existing brands to do it.
Our brands can play in other categories. We're at the moment a biscuit, chocolate, gum and candy company. But if you think about Oreos, where you already can see the example, Oreos is in ice cream, Oreos in yogurt, you can find Oreos brownie. So we have brands that can play across these categories, and we're going to do a bigger drive towards that also, so broader snacking.
Shares of Mondelez were off 2% to $42.52. Kraft Heinz said business is being hurt by rising costs and the impact from Canada's retaliatory tariffs. The maker of Heinz ketchup said higher labor, freight, oil, and plastic packaging costs have been a headwind. The company did, however, say it is open to a potential acquisition to drive its growth. The shares fell a fraction to $56.59. And investors had their first chance to react to Finisar's stronger than expected results, which came out after the bell last night. The technology company expects earnings for the current quarter to surpass expectations. The shares rose 7% to $20.15. Our weekly Market Monitor guest says that you can still find some great investment opportunities in a market that he says is not cheap. It's his first time on the program. We welcome Mark Duvall, co-portfolio manager of the Hennessy Equity and Income Fund. Welcome, Mark. Nice to have you here.
Great, thank you. Thanks for having me.
Let's get right to your picks. Dollar Tree, they really operate thousands of stores across the country. Why do you like them?
Yeah, Dollar Tree does operate about 15,000 stores under 2 different banner names. One, Dollar Tree, which is about 6,500 stores. The other, Family Dollar, 8,500 stores. What we like about it is Dollar Tree is really the industry leader in terms of margins and same-store sales. Everything's $1 at their store. It's a great treasure hunt environment for consumers, so doing very well. The opportunity, though, is the 8,500 Family Dollar stores that they acquired a few years ago. That business has been struggling. We think right now the market is not pricing in any value to Family Dollar, which we think is too draconian. The Family Dollar itself generates about $10 billion in annual sales, $450 million in operating profits. So we think there's significant upside potential in the stock, but very limited downside.
All right, Carnival Corporation, the cruise ship operator, is in obviously the entertainment space as well as the travel space. Why do you like it?
Yeah, Carnival, we like a number of things. One, it's in a tax-advantaged industry, so they only pay about a 5% effective tax rate. Consolidated industry, so very few competitors. Basically, the 3 main players control 80% plus of the market, so that tends to lead to better pricing power. We also see supportive demographics there. Aging population in the U.S. and other developed markets should lead to a strong backlog of clients over time. And we're seeing better bookings at higher pricing and higher onboard spending. So a lot of positives at Carnival, trading at a discount to the market.
And we finish up with Apple, a name that almost everybody knows. You say management has been very open about returning cash to shareholders. They've been aggressive with buybacks. That's one of the reasons you like it.
Yeah, we like Apple a lot. I mean, I think it's one of the best companies in terms of strength of balance sheet, $120 billion in cash and net investments on their books. They generate about $65 billion in annual operating cash flow, and very strong brand. Obviously, iPhone is important, 70% of sales, but they also have a growing services business. iPads, iPods over time have done very well. So we're very bullish about the company and like the downside protection driven by the strength of the balance sheet and the sustainability of the cash flows.
Mark, thank you so much for joining us. Have a great weekend. Mark Duvall.
Thank you, you too, I appreciate it.
With the Hennessy Equity and Income Fund, and you can read more about his picks by going to our website, nbr.com. Coming up, one man's bright idea that is full of heavy metal. British Airways today apologized for a cyber attack after credit card information for customers was compromised. The information taken did not include travel or passport details. British Airways says those who may have been affected were notified by email. Well, it takes a lot of metal, M-E-T-T-L-E, to survive as a musician. Even more if you're using scrap metal, which is M-E-T-A-L, to pay your bills. Scrap metal is a $100 billion a year industry, and 60% of U.S. steel is made from recycled scrap. And that is why one musician on New York's Long Island got the bright idea to make scrapping a full-time business. Scrapping metal is not easy, especially if you'd rather be doing this. But it's how Von Strauss pays the bills. Jobs he had in the past, landscape designer, swimming pool builder, even news photographer, read like a list of cans kicked down the road. Until in 2006, Strauss began picking them up, literally. He helped a friend scrap for just a week before starting his own business, and Metal Man was born.
I saw the potential of the money that could be made if you did it right.
Doing it right meant, among other things, financing a truck instead of renting to improve his cash flow. This is truck number 2. The first one, well, it was scrapped.
It's probably a toaster now, or a microwave.
He also learned hours of separating copper, iron, steel, and aluminum can mean making more money.
You don't cut it off, it's 85 cents a pound. You cut it off, it's $1.
Metal Man says he's picked up about 4 million pounds of scrap, mostly in the fashionable Hamptons on New York's Long Island. He summered there as a child and played music gigs there as a young adult.
You know, you do a rip out in the house. There's copper all over the house. So I'll approach these jobs and talk to the guy knocking it down. And the guy says, give me $300-400. And usually I double or triple my money.
Prices can fluctuate, sometimes violently. China's tariffs on U.S. steel meant growing supply at home this summer, and copper prices dropped nearly 20%.
$1.40 on a copper.
Ouch.
But when he's busy, Strauss will drop 5 or 6 loads a day at recycling centers like Gershow, a family business opened by another scrapper back in 1964. Still, he was pleasantly surprised at how much this load paid.
$549. It was 1,173 pounds.
The biggest risk? Injuries. A fall sidelined him for weeks earlier this year, and he's still having issues with his fingers. A classically trained pianist, Strauss says he's played in 23 bands and written more than 1,000 songs. Now he's finishing a collection of 46 originals. His words, his music. There's value whether his music sells or not.
I'm a perfectionist with the music, and it transfers over to the business. I want to do everything right with the metal thing. I want everybody to be happy when they call me, and then they have the metal man experience.
I'm not feeling the metal man's on his way here.
There's legend, too. A 1,000-pound safe? Call Metal Man.
There was about 30 workmen watching this whole thing. They were all cheering, "Metal Man, Metal Man!"
All part of marketing a superhero persona.
Iron Man's taken, and Man of Steel or Magneto. I'm trying to recycle metal instead of, rip it from the earth and keep mining it and all that stuff. So in a way, I'm trying to do something great for the planet.
Strauss says no, he wouldn't call his music heavy metal, but in addition to his musical interests, all that heavy lifting did pay for his trucks, and it also helped put his daughter through college. And before we go, here are some fun facts about 401ks, since today is National 401k Day. The accounts were created in 1980. They were initially intended to supplement pensions, but today they are starting to replace pensions as the prominent retirement vehicle. And as of 2017, they had about $4.8 trillion in assets. And that will do it for us tonight on Nightly Business Report. Thanks so much for joining us. Have a great weekend, everybody, and we will see you Monday.